Let's start with NVIDIA. We say it's a moment in markets history. It broke its own record, but it's one of the bigger positions you hold, Denny. So when you see the red headline on the Bloomberg terminal, how do you react? How does that make you think?
Well, I think, NVIDIA has been a remarkable stock for the last year and a half, and that's primarily been because of the financial performance. I mean, the ramp in revenues that we've seen with its AI chips and GPUs is like nothing we've ever seen before. And, where the market's at right now, it's really this push and pull. And what we've seen, if you just look at the hyperscaler earnings so far, and particularly the CapEx forecasts, the market is just really hinging on every word that we're hearing. And, effectively what we've heard is that nobody's blinking. And you have seen CapEx go up at Google, you've seen CapEx go up at Microsoft, and you're seeing CapEx go up at Meta, and all of those companies seem to be implying that there's no end in sight, at least, through 2025, and that should be good for NVIDIA. And, if we actually look at the other data points in the industry, AMD just reported, and the numbers were fine, but, it's really just a really, really small fraction of the amount of AI-related chips that NVIDIA is selling, and NVIDIA's embarking on probably its most significant product cycle ever with Blackwell as it goes to a full systems approach this fall.
So actually, I ask you about that specific point. I've discussed with Jensen Huang the annual cadence of new product refresh. But the bit that's kind of concerning or hard to understand is, what about all those companies, the hyperscalers, but also others, that invested at the H100 generation? And they may have only just got that capacity online. And then suddenly, they have the option or choice of whether they buy the next cutting edge generation of chip, upgrade. And I think that Jensen's probably talked to you as well, right, about the ability to swap in and out those generation of GPU quite easily. But it's hard to fathom, really.
Yeah, well, what's really interesting, and I'll give you a couple data points. Last night, Mark Zuckerberg announced this publicly. He talked about that Llama 4, which is the next iteration of their open source large language model that they just have been evolving, is going to require 10x the compute that Llama 3 required. And why that's important is, if you talk to the leaders in industry, you'll hear a comment. And that comment is, we want tomorrow's GPUs. And the reason you hear that comment is because one of the single biggest bottlenecks to actually advancing these large language models, whether it's OpenAI, Anthropic, Google with Gemini, Llama, whatever it might be, you need increased compute power. And that is exactly what Blackwell brings. And so the important part for these companies is making sure that they have the ability to actually create fungibility with the GPUs so that when you use H100s and then you're going to move to Blackwell, you can actually use those H100s for inference, or you can use them for other parts of your company. Whether for Microsoft that could be to support Office 365 and Copilot, or GitHub Copilot, or in Meta's case, to support the recommendation engine, or content creation, or whatever it may be. And so having that fungibility of the GPUs, but then also having the ability to lean in hard to the latest generation so that you can push the envelope with these frontier models.
So Denny, this is a good point to go to Apple, because it's a different story, right? They are not a hyperscaler. They don't make the same direct investment in infrastructure. The CapEx has always been low. But the AI story is the same. It's a smaller position for you, but your approach going into this evening?
Well, it's always hard going. You just never know, right?
Okay.
We're here on the day of earnings. But here's what I can say. We were really impressed with Apple Intelligence and what we saw. The world was waiting to hear what they were going to deliver. It's not ready for prime time yet. This is unlikely to be a massive cycle, with the 16. But as we start looking into next year, and if they get Siri right, and here's the beauty of the Apple model. All this CapEx, this $200 billion plus that the hyperscalers are deploying into CapEx, Apple gets to leverage that because they are the gateway to the AI-enabled internet, through the iPhone interface. And I think that's really underappreciated as it's related to Apple. It's a very capital-efficient model.
And Denny, sorry to jump around, but Amazon, I mean, I think with the focus then switches back to AWS and whether the CapEx story and the investment cycle is still intact.
Yeah, so, Amazon's a little different. And the reason it's a little different is, as I mentioned, if you think about Alphabet, you think about Microsoft, you think about Meta, and that fungibility element of GPUs and capital expenditures. Amazon doesn't quite have that. They can't really repurpose a bunch of GPUs into their core business because it's not a daily engagement app like Office 365 or Copilot or Meta or Search. And it really does hinge on their ability to provide the underlying compute for other companies. And so they're really in a push and pull of, having been the dominant provider of cloud computing services for the last 15 years and now pivoting their business to try to compete as aggressively with Microsoft and Alphabet in this next generation of cloud compute, which is AI enabled.